Now, we've been talking about bonds recently as investors turn to them amid equity uncertainty. Here's an interesting sounding bond investment. Kangaroo bonds. For more on them, well, Katrina Nichols joins me now here in the Singapore studio. Hey, we're wondering, sales of Kangaroo bonds have stalled recently. Why is that?
Well, basically what's been happening is that banks in Australia have been making use of this government guarantee to sell their bonds. And investors, you know, they're very risk adverse, it's credit paranoia. They like what they know. So something that's closer to home, backed by the Australian government, makes them very happy. So they've been buying these bonds instead. And basically that's resulted in sales of not one Kangaroo bond between August and April this year, which is basically the worst result in a decade.
Do we see a pickup anytime soon?
Well, what's been happening is that the issuers of these Kangaroo bonds, these so-called supranational borrowers, have been forced to basically lift their game and sort of pay more interest to get their bond sales away. Historically, they used to be what we call LIBOR minus or swap minus funders, which basically means they could offer bonds at spreads below the benchmark rate. Now, in sort of more normal times, this is okay because they're AAA rated, very creditworthy. You know, they were a sure bet for investors. But in this sort of a climate, investors are wanting more.
Okay, and in terms of rates, investors want more, but in terms of rates, what were these RU bonds offering and what's changed?
Well, basically they were offering sort of rates below LIBOR or below the swap rates. So, you know, 30 basis points below. What we're seeing now is they're offering more realistic rates. So, say 100 basis points above the benchmark, which is more in line with what the domestic banks in Australia have been offering.
Taking a look at the months ahead, is it going to be plain sailing for RU bonds from now on? Are there challenges ahead that we're expecting?
There are. Look, there are certainly challenges ahead. I mean, they've lifted their game and there have been sales. I mean, since April, we've actually seen 11 issues which have totaled 5.5 billion Aussie. So they're doing quite well. But what also has been happening in Australia, the banks are still using the government guarantee. We're also seeing semi-government bonds as well increasing popularity. Now, investors in Australia really like these because they're highly liquid, means they can be turned into cash easily, which in this environment is a great thing.
All right, Katrina Nichols, thank you so much for that.